Morning, Steve here in Chicago with the morning grain comments. Well, we've got beans and meal a little bit lower. We've got corn lower, and then we've got wheat a little bit higher. As far as the news overnight, first of all, weather-wise, South America looks like Argentina is going to remain dry. People are reducing some of their crop numbers, but at the same time, they are offering corn and meal for export, which is weighing on our markets here. In Brazil, some rains could slow harvest the beans down there and corn planting, but no one is lowering their crop numbers. And they've got a record 19 million tons of soybeans ready to load in vessels. And some people think that they will actually clean that up in the next 45 days and export a record amount of 21 million tons of beans Feb March versus 15 last year. So all those things I think are a little bit negative to our markets. In China, we're seeing soybean futures continue to trade higher, while meal and oil futures trade lower. That's probably lowering their crush margins, and probably the higher beans is a result of the delay in Brazil shipments of beans. Not sure exactly if meal lower trade is because of concern about the African swine fever reducing some of their hog numbers, but we really don't know that for sure. Here in the United States, it looks like there's going to be some rain for the southern plains, especially central Kansas. That's much needed after the cold temperatures. But we did see the USDA lower crop ratings for Kansas, Oklahoma, and Texas wheat conditions. That might be supporting the wheat. The Motif wheat futures also made 8-year highs on talk of tightening supplies in Europe. As far as the soybean crush, January was a record, and that also might be weighing on meal and oil values. As far as U.S. weather is concerned, we're kind of heading into what is considered our early spring. We've got 3% of the Texas corn planted versus 7 average. The rains in the Delta probably is slowing plantings there. Our weather guy looks for mostly a normal spring across much of the Midwest. There's one forecaster out there that could see a little bit wetter than normal conditions. It's a long way out, but our weather guy could see a little bit less moisture middle of January through August for much of the Midwest and plains. That could also be true for Russia and maybe northern China. But again, that's a long way away for the market to try to trade. There is a little bit more confidence that we're going to run really tight on old crop corn and soybean supplies before our next harvest. The key might be the soybean prices and spreads as if we can bring beans in from Brazil on the East Coast. So we're looking at a choppy trade again. I think the markets are negative as far as technical signals are concerned, and we're just trying to establish a trading range going into the USDA March reports. Again, their first report on March 9 is not expected to make a lot of changes to U.S. corn, soybean, and wheat carryouts or world numbers. On March 31st, they're expected to show higher acres, and the amount of that, especially in corn, is key to markets. And they could show lower corn and soybean March 1 stocks versus a year ago, especially in soybeans. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.